All right, welcome everybody. Doug here with the LincolnList.com. This is the Stock Market Weekly Review for the 17th of August. I hope your month is going well. As always, if you want to go to the next level as a trader, you're struggling, you can't put consistency together, you have a bunch of great trades and one just wipes you out. Visit the LincolnList.com, take the 14-day free trial, see how we view the market and how we trade it as stock traders. It is not a chat room. We do not just type in alerts. We show you every trade live in real time on the screen, very similar to what you're seeing now. So not only do you see how the trade unfolds, but you get to see the theory and the whole thinking process and the whole researching process that goes behind every trade that we take. To me, that's what separates us and that's what makes the difference. Visit the LincolnList.com. Let's take a little bit of a look at the SPY, what we might be to expect or what we could expect through this coming week. And just maybe, we might be seeing a shift in the overall complexion of the market. One of the things I learned mostly from trading is when something goes through a correction cycle, there's always a sign. There was always something that happened several months before the real correction came that kind of put the writing on the wall, if you know what I'm saying. And maybe, I'm not saying that's what we're in right now. I would need to see a little bit more to convince me of that. But what we've seen lately in the last couple of weeks with the market is starting to lean me a little bit more to possibly opening ourselves up for a correction. If you've been following up some of the stuff I've been talking about with the market, I don't like to predict tops and bottoms. That's not what I do. I just let the market do what it wants and trade accordingly. But I've been focusing really, we've been stuck in this tight range all the way back into Thanksgiving pretty much. The lows of the 204 and the upper area of the 213. Now, a couple of weeks ago, I said, well, we're spending most of our time floating towards the top. So maybe, we'll see maybe another move that goes up a little bit higher. But over the last couple of weeks, that's completely changed. And what I've noticed mostly was maybe a couple of months ago when you got a big washout to start the day in the market. We used to kind of have this joke. You would see it a lot on social media. It's like, oh, stock market's going to go green. It would open up a couple of 100 points down, turn around, and end up going green. Stocks would begin to flush or appear like they were going to tank, and the dip would always get bought. I mean, it was a joke, right? Buy the dip, buy the dip. Now, it doesn't look so much like buy the dip is that exciting because a lot of these stocks are washing out and then they're cycling lower. I mean, we've seen some massive corrections in some of these stocks, and some that began the day selling just continued. So, kind of looking at some of these, I'm saying that when you're looking at dips, they're not being bought up with the ferociousness, for lack of a better word, that they have been in the past. So it's something to keep your eye on. We're seeing it. Yes, the market has fought off some pretty good levels. There was a pretty big dip there on Thursday where it came back from, but there was a lot of volatility in that move, something that we really haven't seen a lot lately. Again, not predicting the future, that's not what I do, but just kind of giving you a little taste that maybe something here is starting to change a little bit. Keep your eye on it. You never know from one moment. I still stand by what I said. I won't really start changing my biases and thinking a correction will come until we start closing under 204 on the SPY. And maybe that never happens, but really been stuck in this tight range now for a long time. At some point, one of these numbers are going to give. We're either going to break back to that upside there where you see up top here, or we're going to lose the bottom, and then we'll see what happens after that. Now, there have been some pretty good stocks that's opened up. One of these I want to take a look at, which is going to be my top thought. I say top thought because you never know what's going to happen on a Monday. But this EGRX, a lot of these pharma companies I mentioned really took a hit over the last couple of weeks, and rightfully so. I mean, you look at a stock here a couple of years ago. I mean, this is a $17 stock, spikes pretty much uninhibited straight up to $101, $102. It's due for a correction. I mean, come on, these things don't go up like this forever. But this thing finally broke trend, and when it breaks trend that long, oftentimes these moves can be violent. So you can go all the way back up here and you can draw a trend line, and when it finally loses this 88.12 area, it really gets sold off fast. You can see how fast that drop was. It just wipes out several months worth of gains. Now, this was one of those ones is when I talk about buying the dip. Maybe a couple months ago, this thing would have got snatched up a lot. You had some pullbacks like here, and then they immediately got picked up. Watching this thing, though, we've seen flush and a flush and a flush. It hasn't really developed a great support area yet. So for me, what it's going to have to do is come into some of these supports, probably 61s, somewhere in that where you got a little bit of support. Maybe this is a lot of time what traders do, which I've made the mistake several times, is when you're trying to dip buy or you're shorting a parabolic, you're often not looking at significant levels of support and resistance. Just because it's going up a lot or down a lot doesn't mean it won't go a lot further. I mean, usually when stocks pivot, they do so at a certain number that has some meaning to it. But if this thing would begin the day with a flush on Monday that gets us a little closer down towards this lower 60s, I would be very, very interested in at least attempting a small size position, even if it was just short. Something very similar to today, which we were doing in the trade room. You get the big red bar like this to start the day, a lot of panic, and then the stock drops, all the way down to 69.30s. People are just getting stopped out, and then a few minutes later, it just rallies right back to 74. Even though the stock ends up going red and giving that all back, there was still a good trade to be had here, especially off of the flush and off of the panic. But again, this is what we're talking about. You just don't trade it because it's red. There's a reason why it bounced at this number, and there's a reason why you should be in the trade room if you don't know what that reason is. But there's good movement in this stock, even though, like I said, it did bounce. There was a short to be had there too. So keep an eye on this one. I would prefer to play the flush side. If it flushes, I would like to buy some of this just for a day trade. Maybe even hold it overnight if it's really, really strong and has a strong bounce. Probably not, but I would like to play that. Now, if it does gap up, you get the market gap or a panic rally, let's call it in this stock, something like you saw into SUNY, S-U-N-E, then I'd be very cautious about that move. I wouldn't run into that. I would have to see something be tested there as well, because I wouldn't just trust that after being down this much and you begin the day with some parabolics or a lot of greens. Now, again, traders like to chase those moves saying, okay, that's the bottom. People are interested now, only to see the stock reverse, which is what it did today. It spiked back up to green, and then it rolls back over. So you got to be a little bit cautious about that move. I'm looking for something that goes a little deeper into support before I want to buy this thing. Also, DST. This was another one. When speaking about buying the dip, this was one that didn't work out for me. This thing just flushed and flushed and flushed. And I mean, it just got hammered one day from 131 pretty much all the way down to 104, and it's been stuck down to here ever since. I got this up here because maybe now we saw a pretty good March here late in the session on Friday. Maybe, just maybe down here, you found a little bottom, a short-term bottom. I still think the real move in a stock like this will be if it can break the resistance where it struggled with recently, which is about 109.5. If you can close above that, you might be able to fill in the area. Maybe it's better waiting until it actually does that, because just down in here, you're in the consolidation, and you're just banging back and forth in a really, really tight range, which makes it a little bit difficult for you to make money. This is something that might not happen soon, but set yourself an alert there. If you start working your way to the 109s, this is worth taking a look at, because if it can break this, you could see a very, very nice up move. Stock that looked very similar was Etsy, ETSY, which had a nice move. Again, doesn't need to last for 2 to 3 days, just as long as you get what you came for. That's all that's important. So kind of keep your eye here. Very, very nice looking chart. Needs a little bit of help before it can kind of move to the upside at DST. And then last, I want to look at a little bit of this RDUS, RDUS. This is another one here, just kind of been holding the moving averages a little bit. It's been tested twice down here at this 63.50 level. See, it's got a pretty nice test. So, it's got a pretty secure bottom. Plus, that's at the 50 moving average. It's holding that. A lot like what I was talking about DST. I think you've got to get up to about the 69.50s before, this stock can really open up and maybe start working its way back up here a little bit. I'm not saying it's going to go back to 80, but you might be able to get a bounce. At some point, either this one as well as the previous stock, they're going to break this level. Maybe it doesn't happen this week. Maybe it's something next week, a month, who knows. But set yourself some alerts. At some point, one of those levels will give and really give you a cleaner direction. Right now, I think with this and DST, you're stuck in a range that really makes it difficult for you to pinpoint, a great area where you want to get in and do some business. There's probably going to be a lot of other trades that just naturally come up that will be a lot better. But set them up there. You just never know how things are going to work out. There's a lot of other plays there as well. So I'm going to just leave it with those few that we can talk about now. As I said at the beginning, if you really looking to tie that together, one of the things about stock trading is there comes a point where you know how to read a chart. You know that. You get it. You know how to scan for stocks and find them. You got that part. But putting all that together, that's the hard part, is getting that consistency, is taking that information and executing it. As I've said so many times before, execution is the key to everything. You got to get the right entries on your trades. You got to be at the right spot with the right entry. You've got to be patient for that, because if you chase a stock, then that leaves you more vulnerable to being stopped out, right? And that's a whole snowball effect. You panic, you stop out, you get a bad entry, you get down further than you want, and it just kind of manifests after that. And then some people get angry, they take revenge trades, and there's just one big nightmare after that. I urge you to visit thelincolnlist.com. As I said in the beginning, it's not a chat room. It's like nothing else that you have seen. Every stock trade is made live in real time on the screen. You're not just getting an alert. It's not, hey, buy this, hey, short this. You see the trade. You see the theory behind the trade. You understand why somebody would take that trade, why we would do it. And then you learn to find these kind of setups yourself, to learn how to make those trades, because there's so much more that goes into being successful than just hot stock picks and chart reading. That's not going to make you rich in this game. It's going to take a lot more than that, and you need to develop those skills every day, and sometimes it pays to be in an environment that can do that, right? So if you need the help, visit thelincolnlist.com. As always, if you need me, any questions, you do not have to be a member for me to answer your questions. Reach out to me, service@thelincolnlist.com. I want to thank you for watching this video. Have a great week of trading. Talk to you soon.